The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 140. You get the Nasdaq down 21. S&P's off 13. Gold contract down $4, trading at $12.51. We get silver down 13 cents, $15.95. Light sweet crude off 71 cents, $73.38. They came out with numbers last night. It was a drawdown. So, be interesting this morning.
Yeah, half hour from right now, we'll get those EIA numbers.
And, you know, it seems like that's $75, man. It doesn't want to come off that number. Notes and bonds, you get the 10-year note up 4 ticks, 120.04, 30-year bond up 9 at 145.09. King dollar's flat at 93.905. Even with King dollar flat, it's not helping the metals market. We get euro at 117.38. The yen is out here at 111.22. And let's go to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12, awesome program. Until the 17th, we have swim
18th,
lessons.
I believe. 1 week from today,
Until
right?
the 17th, swim lessons. And the 18th, guess what? You got a trading show, folks.
Fast markets.
Each and every day, fast markets. Gotta love it. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Well,
What's going on today, huh, guys?
You think you'll have enough to talk about in this new program a week from today, Kevin? Maybe.
You know, Kevin, I was still on the air last night when this came across the tape. And so, you know, right away my phone lights up, right? Like, what just happened?
Quite a spike in those futures markets. Yeah.
They went south in about a second. You know, that being said, this market keeps shaking everything off, man. I mean, 13 points is nothing on the S&P.
It's rebounded, no, right?
Yeah, you know.
Pretty muted response.
Yeah.
Such a headline number. But there was some emotional trade last night. I mean, they had a pretty big move. But you're exactly right, Tom. Think about this. Who would sell stocks right now going into an earnings season where they're expected to be up 20% in earnings? You look at some of the bank stocks today, like J.P. Morgan, they're all up.
Yeah, the bet.
Not a lot of conviction.
There's no doubt that J.P. Morgan. I mean, that led. Not yesterday, the day before that. That was a big number.
Yes.
You know what I mean? They took them off. Now the real question is going to be is that, you know, what are they going to do when they come out Friday? You know, it's ironic, Kevin. We all know this is that when they came out with their earnings last time, the earnings were dynamite.
Right.
And they were at their highs, and they sold them off. And it's like, okay, are you really going to make more money than the last time?
Record-breaking
They
earnings,
did.
right?
They did. You know. So.
Exactly right, Tom. And we're wondering, as we go into this earnings season, what the personality of this earnings season will be.
Yeah.
Because last time, make no mistake, and it started with the banks, as it always does, good earnings, good numbers, and the stocks all sold off.
Right.
Off those numbers. So that's kind of an interesting take on what are we going to look like coming into this earnings season, because after the strong numbers we put up last quarter, they're talking about 20% increase in earnings again for this quarter. And so, you know, going into some of these numbers last week, the banks were pretty weak and you know, under pressure going in. They had a big relief rally early this week. Now they're, you know, and they're kind of holding today. You know, now J.P. Morgan's down a dime here, 8 cents as we get to, you know, the 9 o'clock hour Chicago time. But they're not doing a lot of damage but why? Who's selling them? Index funds, right? When futures trade, they trade against index funds. So the fact that they're in these indexes is always going to cause some trading. But, you know, I don't see a strong case to really lighten your load a lot on some of these ahead of, you know, what is expected to be a pretty strong earnings season.
Yeah, well, you just brought up, I think, one of the biggest issues that are hard for even investors to wrap their head around. And what that is that if the futures get sold, the indexes get sold. Right. And on top of that, it's the ETF structures. You know, Kevin, when the Qs went public, right? At that point it was the American Stock Exchange, and I had the vice president of the American Stock Exchange on, and I was interviewing him. And what had ended up happening That was in 94, 95, I think, okay? And what was amazing is the first time that the ETF structures actually really hit the market was in 2000. Because what had happened is that none of us were used to the fact that there still wasn't a lot of ETFs then. And then if you sold the Qs, everyone at that point, you had to sell Dell, Sun Micro. They had, you know, the trustee of the Qs.
Yes.
And that is a big deal now because we have so many ETFs, okay? So that you have selling or buying that has to do with what everyone else is doing. So it's pretty intense, you know?
Momentum, right?
Yeah.
Definitely.
If the momentum goes the other way, what ends up happening, it accelerates very quickly because it's not a motion that you or Kevin is saying, I want to sell this investment. What it is that if someone sells, they have to sell the Qs. If Qs sell, they have to sell the stocks in the Qs.
Sure.
You know, so.
Right, and it's such an interesting, this is the relationship that is formed in these markets. I mean, you've got the E-minis down 15.5, about just over 0.5%. Well, some of these stocks have, but why is new tariffs on all these things affecting something like Boeing, other than the fact that steel and aluminum are part of planes, obviously, but those are already known quantities in steel and aluminum. This is the new tariffs on new things, but yet there it is affecting Boeing's stock down, 1.4% today. So it's fascinating. It's the new world we live in where you got to pay attention. I don't expect stocks just to open up this morning, although some of the banks are holding pretty unchanged, but I really want to watch, Tom, how they finish the day. Because, let's face it, bonds are up, right?
Yes.
10-year, 30-year are up. But that PPI number was hot.
It was? Listen.
Up 0.3 in the year-over-year numbers.
When that PPI number came out this morning, man, we are watching gold and the dollar, and I was surprised the dollar sold off. It was like, whoa, man, okay. It was just the opposite what you'd think. And bonds basically held, and gold did too. And I says, man, this is kind of strange. I think what we have so many moving parts. None of us have been around when big tariffs went into place. The last time was 1934. You know what I mean? So it's like, okay, there was one, small volley when Bush was president, but that thing got over pretty quickly. Do you know what I mean? So I really, as the company-wise, I don't think we really understand what will be the price increases coming down the pipe. What I definitely do remember, though, in the 80s is that I remember when Shanghai first opened and prices went down very dramatically on the things that we don't need, meaning all our clothes and stuff that we throw away. Do you know what I mean? Not food. And if those go up, start going up, 10%, 11%, I think people are going to start feeling that. Sure. You know what I mean? So.
Right. Their 30-year bond was up 17 ticks early this morning, Tom. It's now only up between 8 and 9 ticks here, ticking back and forth. So it's going to be a long day for the bonds if you're hoping for green in terms of the 30-year bond today. The 10-year only up 4 ticks. Right,
and I think we get an auction of the 10-year. I'm not sure what time it is, but there's an auction this morning on the 10-year.
Right.
Well, there's no doubt that you guys are starting this show right at the right time. And what's going to happen, folks, starting the 18th, I think it's a week from tomorrow. Yesterday, right? A week from today. Perfect, okay? We get a great trading show. You got to love it, man.
Got to love it.
Kevin, you have a great one, safe one. Of course, we look forward to the show in 45 minutes. Have a great one. Tommy and I come right back, folks. Dow's down 164, Nasdaq's off 30, S&P's are off 14. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 149. S&Ps are off 12. You get the NASDAQ off, what is that? 19. And I guess Canada just came out with some kind of announcement because
so I believe they have a rate hike
the Canadian dollar got stronger. I was thinking first it got weaker. It actually got stronger.
Yeah. So they have a rate hike in Canada, and that's the Canadian dollar. And so, yeah, Canadian dollar strengthening versus the U.S. dollar, right?
Went from 131 to 130.90.
Yeah, 131.40 to 130.90. Right on that news. So some action.
Oh, that's a big number.
Yeah, and you know what's interesting though is not far off from where we just were closed yesterday. So nothing too dramatic, right? In terms of we did trade higher, we're kind of pulling back to where we were. So what else? It is Wednesday.
Yeah, oil.
It is oil day.
Oil.
We're going to jump over.
We had the API numbers come out last night. I think it was minus 6 million barrels, 6.5, I think. And the estimate, one of the estimates was 4.5 or something. And it was flat, at 4:30 in the afternoon.
Okay. So we get the EIA numbers. I'm just pulling back. So that was, you got a little bit of a spike there, right, on that API number, going from about 73.99 up to 74.40. And from there, we've pulled back about a full dollar. We're trading 73.34, and it's going to happen. We get the oil numbers. Let me just see where we are. So I'm going to have to refresh this to jump into the noon one. So the 11 a.m. So we're trading 73.35 right now. It looks like we're going to have 73.25. You know what? I'm just going to refresh this real quick to get all of these up. So what happens is I have the Nadex platform up from very early in the morning, and when these spreads are resetting, let's clear out some of that data. That's not even, I'm going to have to clean this up. And they're resetting, of course, and recalibrating every hour. So that's all. That my platform was up before these launched at 10 a.m. I had this up since prior to even exactly 8 o'clock. So jumping into the 11s, we'll start off to compare things. 11 a.m., 73.25 is a point that we can use for our bullish and bearish spread, which is nice. We're only 10 pennies away from where we're trading at right now. So 73.25 would be our bullish spread up to 74.75, and then the same $1.50 to the downside, looking at 73.25 down to 71.25. You'd be buying the bullish spread.
Yeah.
This is going to be where your intrinsic value is, right? Because we're about 10 pennies above the floor of that. That means that's going to be kind of our expensive spread of the two because we have value in it. So we have some premium priced in here,
Yeah.
and $43 for both
And
legs
that's
of
the
that.
11 o'clock.
And these
so
are the 11s.
They expect some movement out here today.
And now let's just see where the noons line up. So they're going to have an exact same price point, which is nice. So we're going to get to price basically that extra hour. So I'm going to leave these 11 a.m.s up while I pull up the 12s so we can compare them. So here's a great example. Here's your 11 a.m. bullish spread.
Yeah.
And again, we have about 7 cents now of intrinsic value. And you can see the bid offer exactly. So this spread would cost us $24, which is the 24 cents above 73.25. But if you wanted to have the extra hour, it's going to cost you, just ticking it up, $28, right?
Okay,
The
4
difference.
pennies, right?
Yeah, well,
About
yeah.
$4.
Yes, right. $4 on that one side.
Yeah.
Yep, exactly. And then to pull up, so not to confuse, there's our 12. And then on the bearish side, same exact thing, 73.25 down 2. And you can see the slight difference. So you're looking at about a 3 penny difference, 3 to 4 pennies on each leg of it.
Right.
Right? Which isn't bad when you
No.
consider the extra hour coming
No.
into it. So we had about $43 for the 11 a.m. combined.
Yep.
And then if we were to purchase a bullish spread for noon, sell the bearish spread for noon as well, and we're looking at about $48. So that's 5, 6, 7, and what's happening here as well is we're actually ticking back to 73.25,
We're moving around,
which
yeah.
would be the best scenario because that's
Right.
where you're paying no intrinsic value on either side.
That's right, because only 5 cents above it now.
Yeah, when we're 10
And we're
cents
stuck.
above it.
Exactly.
And so let's just recalibrate the 11s because
Yeah.
as that ticked back, so again, there's your bullish, there's your bearish. So yeah, now 42,
Yeah.
right? We were just
We're at
looking
44, I think. right?
43? 43, 44.
okay.
Either way, it ticked down
Right.
about $1,
Right.
slightly cheaper, but great example as to when you come back and now we're up, and there we are. We're exactly at 73.25.
Ooh, look at that.
So as that, be selling and buying, there you go, 41.
Wow.
So that's a great example
No,
of how we
that's
started at
cool.
43, 44.
Yep.
And as it ticks back to that kind of perfect spot where you're right at the floor and the ceiling of
Yeah.
your bullish and bearish spread. And so same thing, looking at the noon, just to get that one, you're buying the bullish spread and you're selling, come on. Yeah, so about 49 still, 49.
So they're looking for some movement today.
That's
That's
there's
pretty
some
cool.
decent premium.
Yeah.
You're paying at least $40 for both legs.
Yeah.
41 was as low as we got it. So $41, $42 for the 11 a.m. You're looking at about $48 for the noon.
Let's look at the chart again. I'm just curious. I know you went over it, but I want to see
Sure.
what the movement was from last night to today.
Sure. We had about $1 to the downside, and as we continue, I mean, look at that action as we're talking about it.
That's good then. That's what you want to see when you're doing a volatility trade,
For
right?
sure, yeah.
I mean,
On the API number last night, we spiked to 74.40 almost, 74.37 maybe, and from there we're down $1.20 almost.
Yeah.
From
this
those
last
numbers.
bar is pretty intense.
It is.
actually.
We're moving
Yeah.
down, and these are 5-minute bars we're looking at, and yeah, we started at 70.
It's like someone know that information,
Right. So let's just see how the 230s line up as well. So what's interesting here is we're not going to get the same exact price point of 73.25, which was nice, but you could change things a little bit, as in the 230 here takes 73.50, which is pretty close. The only thing that's going to change there is that you're now going to have 30 cents of intrinsic value to the bearish side, right?
Yeah.
Because you're 30 cents below. So this this bearish spread has some value in it, almost 30 cents.
Right.
So selling that, it's going to cost you 50. This is where things get expensive when you have a lot of intrinsic
It
value.
does.
And then the bullish spread is going to be way out of the money. So the difference of these two basically being the 30
Yep.
cents of value you got to pay on this bullish side. So that's an expensive trade. But guess what? It's not bad if you happen to be a little bearish
Right,
too.
right.
Because-
and of course you can just go either side if you decide you want to do something like
Exactly.
that.
If you were just bearish oil, you could be selling it at $73.
Yeah.
You have profit potential down to $70.50, and you're capped out at losses at $73.50. I mean, you're risking from $73 to $73.50.
Yeah.
And realistically, for that type of a risk reward, risking 1 to make 5.
Right.
The only thing you're paying is that you're selling it at 73, now 73.03. and the market's at 73.25. So you're paying that 20 cents of premium.
It's a lot better than selling in the futures, I can tell you that.
It could be, depending on what happens.
Yeah, right.
We could get some fast moves. It's 10:26 right now, and we get those numbers in 4 minutes. And
this is going to be intriguing, man, because it seems that when we're looking at these, they're expecting a big move here. You know, compared to like every week when we do these, that seems to be just a little bit more than we have, right?
Yeah, there's some decent premium priced in there, for sure.
Yeah.
For sure. Yep. It would make sense. As in, normally, you know, it's looking for a 40 or 50 cent move over the course, and with the type of action we've been getting in oil,
for sure.
There's no reason why.
No, and we've had $1.50 almost every day. You know, it's been fluctuating between that $72.50 to $75.
I agree, and that's not even with inventory numbers coming.
No,
right?
Exactly.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 135. Nasdaq's up 17. S&Ps are down 10. We'll be coming back with those oil numbers for you, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. These are quite some numbers here.
We got quite a headline number.
Yeah.
So crude oil inventory is falling 12.63 million barrels.
Yeah.
We'll get into the estimates, but either way, jumping back to the price, you want some volatility.
Look at that.
There you go. So this red bar is the 5-minute bar leading to the news. Okay?
Yes.
So we close out this bar at 72.71, and we proceed now. We're trading 73.71.
It went up a buck.
It sure did.
It went up a buck.
It's tough to put things in context that quickly.
Wow.
Quite an acceleration to the downside that we saw, because when we started looking at these trades, let's jump back to the noon trade, for instance. 73.25, right? Was where, and we were even above that. We were trading 73.35 when we started the analysis. Right. By the time we got to the news, it was trading 72.71.
Right.
It goes down 60 cents coming into the news, and then pops a solid $1 on those numbers. Pretty remarkable.
There's
for
your
sure.
volatility trade. And what's so intriguing is that each one of those, we knew that the volatility, well, the market in general was saying, okay, it's going to be a bigger number. It's going to be a high volatility number.
There was some premium priced into it, for sure.
And guess what? The trade worked. Pretty amazing, actually. Wow, that is pretty intense.
So obviously the headlines are going to come in, but big draw, 12.63 million barrels. I can't remember the last time we saw a number in tens of
yeah. Look at that
barrels.
estimate that's in.
So the estimate was a decline of only 3.7 million barrels.
Yeah.
It came in a decline of 12.6. They break it down. Cushing crude, a decline of about 2 million barrels. PADD 3 crude, decline of 7.2. Gasoline, pretty much in line, which is interesting in terms of how far crude was off. Gasoline declined about 700,000. Estimate was about 1 million. Distillates, rise of 4.1 million barrels, and estimate was a rise of 1 million. So pretty remarkable. We'll check back in. Let's take a look at that chart one more time before we peek away. And 73.60 currently. So, you know, what's interesting, most interesting, I'd say right now is, unfortunately, if you were making the 73.25 trade, right, it's like we're still in a losing position here, just to put things in, because we spiked so far low coming into the news, then we spiked higher. But the one thing that you do like to see making, if you chose both legs of that trade, is you like to see volatility. And I would say that this is going to spend some time jumping around to figure out what to do with that type of a miss. And we'll see what happens. We'll check back in. Pretty big number.
Spiking $1. Just think that if you have an oil field and how that works, like when they talk about, you know, 10 million barrels a day, it's like, really? Like,
Pretty remarkable of where prices are in terms of even at the gas pump, and and still, you know, they could be going up from here.
Listen, this number that we're at, if we take, is this? Can I go on there? I'm trying to figure out.
Yeah, something's happening with you. Go ahead. Start typing, I believe.
Okay, so let me do it this way.
No, it's not going to let you. Something funky's going on with the screen.
We'll just get another one.
Okay, sure.
If we pull this up, what you're going to see, oil, you know, it's just coming into this downdraft from 2011 and 2012 or 14, and you know, if it makes it through this number, man, I mean, it's going to be like $105 oil again, man. See this number? What is that? That's 2011. The lows of 2011, that's $75. The lows of 2012 are 77. And that's what it's, you know, that's a monster supply line. Now, you know, we'll see whether they can make it through it. But if it makes it through it, man, you know, that swing point is like, what? There's not much there to 107. You know, but that is a huge supply line. I mean, look at that supply line. That's
definitely.
You know.
Oil, volatility, man.
Wow.
Watch out.
That's intense.
And just to wrap, that's a delayed feed that we're looking at, showing that oil as it'll catch up in about 15 minutes.
Oh, yeah.
Catch up quick.
No doubt. No doubt. So let's go into the Dow Industrials and see where this is going. I mean, the amazing thing, no doubt, is that, you know, you get the bureaucratic TAFs. They're on. The train's left the station, and the market really is still resilient. You know what I mean? I'm a bear. Don't get me wrong, folks. I mean, I think this market's going down, but let me tell you something, man. Every time this market shakes everything off. I mean, it's just pretty amazing, actually.
I would agree.
You get the Boeing's putting 27 negative points in, Caterpillar 17, 3M 15, putting some positive points in, Disney 16, Visa 11, American Express 5. You know, let's and we go over to the NDX 100. You have Fastenal. Look at that. It's up 7.4%. That's a number.
I think, did they have earnings, maybe? I heard them in the headlines somehow.
We'll check
this
that
morning,
out.
of course.
Checkpoint up 2.5%. Take-Two Interactive up 1.6%. American Airlines down 6.3%. That's a big number.
What's going on? They have earnings too, maybe?
Look at that.
Something's going on.
Let's see what we got there. It drops as fear, weakness drags down key revenue gauge. So if there's they're talking about airfares, it seems like there's a good airfare war going on. Because remember, last week they were talking about going to Europe. The fares have gone down so dramatically because of the discount carriers. And what happens in the airline business in general, folks, okay, you only need a couple discount carriers to come into the market to basically bring those fares down dramatically.
So they looks like they lowered their second quarter unit revenue outlook. Okay. So that'll do it when they come out. And
right.
I bet unit revenue is something, but is it, per seat,
person,
right?
yeah.
Per seat, I think, per unit.
And that's a terrible chart. Anyway,
That is not a good looking chart.
No. So 6 months ago, you're trading at $59. You're 36. And this looks like, folks, if we get we're going to get it. More than 1.9 million, you get an ABC down. Your 8 point on this is approximately 45. Let's say 37. You get some big numbers here, man. $8 would get you into 32. It's at 32. 33 is the high of the last low. So when you
quite
put
a roller coaster.
When you put it up, we get this on a 5-year monthly.
Yeah.
And big consolidation.
2 years ago was exact. We're down there June 30th of 16.
Yep.
So talking about just about 2 years, we were down at that level. We rise all the way up to 60, and then the span of 6 months, we were approaching those levels.
Intense. That shows more than anything. You get in the money, folks. Unless you're going to be in these markets for years and years and years, you better take some money off the table, man.
And checking back real quick to oil, you want some
Look at
volatility.
this.
This is where you got to have those quick fingers, man, if you're trading this. So we're literally right back to where we were trading prior to the news, which is really remarkable in terms of, there's the bar. I believe it's going to be the 720 bar, 1020 bar. That's the number we started looking at it right at the beginning of that bar, and we're literally right there. But, man, you wouldn't know the roller coaster we had down to a low of 72.71, spikes to a high of above 74. Pretty cool.
And, if you do these, in fact, you can basically do a demo, folks, coming over to our website, hit the Nadex banner, bring up a demo account, and if you're following along and you do these, what you should also be doing, particularly if you're going to do a volatility trade, there's nothing wrong with putting your order in to sell on the other side.
Sell or buy, depending, right?
Yeah,
exactly.
sell and buy, right? So because in this case, you may have got that on that pop. It's that,
just one of the examples you're talking about. So let's say you went in there and you did the noon spread, and you could have both of your orders already in, but 73.25, you could just be in there and putting in a sell order. And back it up,
74 and a quarter.
So 74 even. 74, $75 in value, right? It spiked above that level. That's all, but it spiked above there for how long, right? 74.03 being the high, pretty quick lift.
No, I know. Yeah. And it might have been enough, though. That's
your order was in there, probably would have been.
Exactly. Stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 136. S&Ps are off 12. Nasdaq is down 19. Let's go over to our man, Mr. Teddy Kegstack from Forex Trading Unlocked, as we do each and every Wednesday at 40 past the hour. Teddy, what's going on?
Hey, how you doing, guys? I'm glad to be here with you guys today. I have a couple interesting things to talk about. Does a dog wag the tail, or does the tail wag the dog?
Yeah, you get the Forex market running. There's no doubt, right?
Absolutely. Well, remember when we talked 2 weeks ago, I was talking about the 111 even level with the Japanese yen.
Okay.
And today we're definitely accelerating above that. And the interesting thing is, Bitcoin, I think, was the precursor little signal for this big move that we have going on over the past 2 days in the currency market. You know that all the regular markets, they stop trading on Friday afternoon and don't open up until Sunday evening, basically. Yes. But Bitcoin and the digital revolution has made Gordon Gekko's adage that money never sleeps come true.
That's pretty cool, right?
You know, it really has. You know,
Yeah.
the markets trade, especially you have a lot of retail business. I would assume it happens over the weekend because people work.
Right.
Over the weekends, they can actually participate in that market. You know, so there was a really interesting setup that happened in the Bitcoin dollar relationship over the weekend. Saturday, the market rallied, and then Sunday, there was a little Japanese candlestick pattern formation that occurred. And then it was confirmed with an even bigger pattern that unfolded into Monday's trading. And then yesterday, there was a big move in the currency market. Now, the reason I'm mentioning the signal with the Bitcoin is that the dollar, the Bitcoin was a sell signal for the Bitcoin versus the dollar, meaning dollar strength. Okay.
Yeah.
So when all the other markets were closed, the Bitcoin market, which we all know the market cap is pretty large now, was already moving the dollar. Okay. So Sunday night, the markets opened up, and the yen and the dollar and the euro and the dollar all of a sudden started to be in play with dollar strength. Okay, so if you see that part, the currencies were already moving because of Bitcoin. And then we were talking about the 30-year also 2 weeks ago. 2 days ago, what happened in the 30-year bond market? They tanked on Monday morning. Why? One of the reasons being was dollar strength. When you have dollar strength, usually you have a little bit of sell-off in the interest rate market. And also, the interest rate variable is also stronger, too, because we have all this talk about the Fed raising the rates again soon.
Sure.
You know? So between those two piled together, you have this U.S. dollar strength pushing the yen, especially now above this 111 area. And you combine that with the tariff trade wars with China. That also is good for Japan because the more we level the playing field with China, the more demand there is for Japanese goods.
Interesting. Okay. Wow.
Right.
Yeah. So you need more yen, of course, to buy Japanese goods, right? That's the theory.
Absolutely.
That's pretty wild, man.
It would make sense, yeah.
Yeah. So, Teddy, the correlation, and I bet, traders, you have your head wrapped around this, but, the rest of us, we're just really starting to get our head wrapped around the aspect of the relationship between Bitcoin and these currencies. And so your take would be that, you have a currency and you better watch the Bitcoin because basically people are trading it and they're trading it. And every time you trade it, whether it's in Japan or China or the U.S., you're using those currencies and changing those currencies. Would that be the theory?
Absolutely. Okay. And it's pretty interesting because if you just look at a Bitcoin dollar or Bitcoin yen or Bitcoin pound, their charts look basically the same. But when you have an actual move, especially in the dollar, that's when you can see where these relationships, because if you're looking at a US dollar Bitcoin or a yen Bitcoin chart, you're basically looking at the same thing.
Okay.
But when you look at, obviously when you look at a yen dollar or a yen pound or whatever, there's sometimes they trade in tandem, but you're not looking at picture perfect charts. They never look the same.
Right.
Okay. So, but now when you have Bitcoin, which is, obviously becoming a major market, in the, around the world, now you have this influence where when the dollar is being used, investors and big money are playing in the Bitcoin market. So where does big money go? So Bitcoin is now absolutely, and like I said, this happened over the weekend. It gave a Japanese candlestick formation, which, a couple of years ago, you looked at the Bitcoin in any relationship, it was unchartable. Now, because it's being traded and there's so much activity,
yes,
it's becoming something that is technically and fundamentally viable. Besides, no matter what your take is on the actual instrument, it just is what it is.
Which is important to say, I know.
And how do you look at those charts when you're looking at them, Teddy, over the weekend especially? Like, is it hourly, 15-minute, daily? What kind of action are you looking at when you're talking about those formations over the weekend for Bitcoin?
It's daily. I don't look at the hourly because, coming from the S&Ps, what those charts look like, especially on an hourly basis, or in a half hour. I equate Bitcoin to the S&Ps with their volatility. You know? So daily is definitely where I look at for that.
Nice.
And so just to change gears for a second, so in the S&P you do the same thing?
Absolutely.
Okay. Okay. Yeah, that's cool to know.
Yeah.
It's going to be intriguing to see, these spreads inside Bitcoin and, see if it can break out either way, right? Because the spread's been pretty narrow for, month and a half right now.
Yeah. No, it's...
Absolutely. And that was the one thing, now that you mentioned the spreads, this is a good time, with yesterday's break in Bitcoin dollar, I think that there's going to be a little bit more follow through, especially because all the pundits yesterday and over the past 2 days have been saying Bitcoin's going to see 7,000 very soon. Now you had this huge break yesterday that happened. I think Bitcoin's got a better chance of seeing 6,000 before 7,000. So that would be a target area what I would look for over the next week or so.
Yes.
And you might see a bounce. I'm not saying Bitcoin's going down in the long term, but I think you have a very good probability chance of seeing Bitcoin hit 6,000 because of the pattern setup that happened over the weekend. It's a sell. So
sure.
Target hit, it should hit around 6,000. And then with the bonds opening up on Monday with the sell-off like they had with the higher interest rate that the bonds probably are going to go down also for about another handle over the next week or so. So if that's right, and the yen continues to, especially if it settles above 111 even today, because yesterday it popped above 111 even, but it didn't settle above there. I think it was 110.990 or something like that. So if it can settle above 111 even today, that's pretty strong momentum there, meaning the big money is definitely going to probably push the dollar-yen trade higher. The dollar is going to probably get a little bit more follow-through into tomorrow. And, tomorrow is Thursday, and you know what happens on Thursdays. Thursdays are either big reversal days or big blow-off days. So you'll probably see profit-taking, the contrarian side, happen more late tomorrow afternoon or probably into Friday, most likely.
Yeah.
That's the way I see it.
Fridays, Coming into any weekend between the currencies and the metals market, man, hold on for
Are
the
we
ride.
already near the end of the week already? That was
My
a quick
God,
week. I
I'm
guess
telling
so.
you,
I know.
man. I'm telling you. Well, listen, Teddy, it's a pleasure. We look forward to speaking to you next week. It's Teddy Kegstad, folks. It's Forex Unlocked.
Forex Trading Unlocked.
Forex Trading Unlocked. You have a great one and a safe one.
You too. Thanks, guys.
Thanks so much. Stay right there, folks. Tommy and I are coming right back. We get the Dow down 153. NASDAQ is down 14. We'll be coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We appreciate you growling and prowling with us out here. Oil market. You talk about volatility out here today.
Poof. So we'll jump to the chart in one moment. One thing that caught the headline here. So in terms of, you had a 12.6 million barrel decline, right? And one of the reasons there is that they are refining that oil at almost record, not record, but refinery run rate well above seasonal averages of 97% refinery utilization rate, contributing to a 7 million barrel draw, and that is in the Gulf Coast region they're talking about.
Right where we are.
Yes,
Right.
totally. So to jump back to the chart, because, man, quite a roller coaster, right?
Look at that.
So we are now below where we were at when we started looking at that number. So here's your 1025 bar. We come into the news. News basically hits the end of this bar. We open almost $1 higher, $1.30 higher, really. We spiked to 74, and now we're $1 below that level, trading 73.06. Pretty remarkable. The first spreads that we were looking at in there, to jump back, they were all going to have a price point of 73.25. Now, what's unfortunate is if you did the 11 a.m.s and you had a volatility trade in there, this is only going to be about 20 cents away from your price right now.
Right.
So that would be, as in you get $20 of value, costing us about $40, so you'd lose there, which would probably be frustrating with the type of action that you got around that just settling back. But and that's why we'd like to pull up the noons too, because if you're really looking for volatility, not a lot of premium in that noon product
4 cents
for the extra hour to see where this plays out.
Right.
So it'll be interesting to see when I come back on at the 12 noon update where it is for sure.
And World Series of Poker, where are we at there?
Yeah, one final update. So in the gambling world, they're down to 26 people. They're going to play from 26 today. It starts at noon Pacific time, so 3 Eastern, right when your show comes in the air. They'll play down to the final 9. Aram Zobian leading the 26. Former champion Joe Cata still in it. So they got a bunch of names.
And that must be big money. Anyone getting knocked out now,
I believe so. Yeah, they're at least up to triple digit, 6 figures, if not 200 grand somewhere around there.
Stay right there, folks. Got swim lessons coming up next. Thanks, pal.
Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.